and get started with our webinar. Thank you for attending today. We'll be discussing the role of housing counseling in the home buying process, particularly as it pertains to buyers returning to the housing market after a foreclosure. My name is Mindy Alt. I'm a research associate with the Center for Housing Policy, a division of the National Housing Conference. For those of you not familiar with NHC, we're a national organization that provides resources and research around affordable housing issues at the federal, state, and local level. I'd like to thank the National Association of Realtors for sponsoring this webinar, as well as additional upcoming webinars that we'll be having later this year. Future webinars will cover other topics related to housing and community development, and we hope that you'll consider joining us for those as well. Before we get started, a few final introductory notes. First, let's cover our most frequently asked question: is this being recorded? Yes. An archived copy of this webinar will be made available on our website, www.nhc.org. Once the recording is online, we'll send a link to everyone who registered. Barring any technical difficulties, we should have this posted within about 48 hours of the webinar. Second, please note that all participant lines are muted in order to ensure clear sound quality for everyone. However, we will be taking questions at the end of the 3 presentations. If you have a question at any time during the webinar, please submit it through the question box in the GoToWebinar control panel. Finally, on the topic of technical difficulties, while we hope the webinar runs smoothly for everyone, we're aware that this doesn't always happen. If you run into any technical difficulties during the webinar, please use the Help menu at the top of the GoToWebinar control panel to locate technical support. If that doesn't work, please visit the GoToWebinar support website, which is support.citrixonline.com. As I mentioned, I'm a researcher here at NHC. I'd like to tell you about our 3 panelists for today's webinar and then move right into our presentations. Remember that there will be time for questions at the end, so feel free to type in questions as you listen to each speaker, and we'll do our best to get to all questions at the end. Our first presenter today is Rebekah King. She's a policy associate with NHC. Rebekah works with coalitions and communicates with administration officials and congressional staff on affordable housing policy issues. She writes and produces NHC policy materials, including regulatory comments, coalition statements, blog posts, publications, and the Washington Wire, which is NHC's weekly update to its members. She received her master's degree in city and regional planning from the University of North Carolina at Chapel Hill and her Bachelor of Arts from James Madison University. Our second panelist is Heather Blankenship, Manager of Intake Services at Neighborhood Housing Services of Chicago. Heather has many years of experience in the housing counseling industry through program management and direct client service work. She holds certifications in housing counseling and program management from the NeighborWorks Center for Homeownership Education and Counseling. And finally, our third panelist is Leah Coldham, Director of Housing Counseling Programs with the Housing Partnership Network. Leah oversees HPN's housing counseling contracts and works closely with the VP of Homeownership Initiatives to foster innovation and business transformation in housing counseling. Leah has also done extensive work with local community development organizations on various affordable housing issues. She has a Master of Regional Planning degree from Cornell University and a BA from McGill University. I'll now turn it over to Rebekah to discuss housing counseling after the housing market crisis and returning buyers.
Thanks, Mindy. Good afternoon, everyone. Thanks for joining us. We have had one question about sound, and I'm assuming that's kind of a more individual problem. So if you want to make sure that you have dialed in either to the audio or through your computer, but if folks are having trouble hearing us, please do send us a note through the chat box or the question box so we can get that resolved. I'm seeing a few folks say they don't have sound. Give us just a second while we troubleshoot that issue.
Oh, okay, but somebody else does have sound.
Let me just check with our panelists. Can our panelists hear us? Yes, I can hear you. This is Leah. Okay, then I think we're good. I think there might be some individual issues, but it looks like most people can hear just fine, which is great. I appreciate your patience as we sort through that. We'd hate to get to the end of a webinar and a recording and have nothing to show for it. So thank you for that. So jumping back into my presentation, I apologize for diverting there. Thanks so much, everyone, for joining us today. We've got a great turnout. And I am really excited about Heather and Leah's presentations. I think there's going to be some really valuable information there. And part of me wants to just jump right into their presentations. But I did want to take this opportunity to just provide some opening comments to frame our discussion. So I'm focusing on 3 areas in my presentation, looking at the value of housing counseling, general trends in the market that I think will be helpful to keep in mind as we talk about returning buyers, and then kind of why we wanted to have a discussion about returning buyers or boomerang buyers. So, value of housing counseling. I think it's important now that we're post-crisis to think about some of what we've learned through the crisis, and one of the things we were able to do during the crisis was a lot of great research on housing counseling and its effectiveness. I'm going to touch on 3 studies, but there's more that I'm not including here for no other reason than I just didn't have the time and wanted to look at some recent studies. So I'm going to start with a 2013 study that Freddie Mac did, and they looked at 38,000 fixed-rate mortgages that were originated from 2000 to 2008. And they wanted to see how homeownership counseling reduced 90-day delinquencies. And you can see on the slide that they found that homeownership counseling for first-time buyers reduced delinquency rates by 29%. NeighborWorks did a similar study in 2013. They looked at a larger subset of about 75,000 loans, but over a shorter time period, October 2007 to September 2009, also looking at the impact of pre-purchase counseling, and found clients who received counseling were a third less likely to become 90 days delinquent. So similar statistics from different studies, which is a good thing. And it does indicate that pre-purchase homeownership counseling really helps buyers be more successful. The last study I want to touch on is even more significant in my mind. It's a 2014 Federal Reserve study, specifically the Federal Reserve Bank of Philadelphia. And the reason I wanted to bring this one up is because, one, it was a longer study, and it was a different structure. So it had an experimental design component that previous studies did not. They used existing data. So the Fed was able to take a group of participants and assign them to control and treatment groups. And they did a baseline survey and then tracked them over the next 4 years. And they looked at credit scores and credit reports as well as this survey. And they were looking at 3 pieces: the influence of homeownership counseling on credit scores, total debt, and delinquencies and payments. And you can see on the slide that overall they found homeownership counseling reduced the likelihood of delinquencies, reduced total debt, and increased credit scores. What's interesting about this research that's a little different from previous studies I mentioned is the difference between the control group and the treatment group. The control group received 1 2-hour pre-purchase workshop. The treatment group got the same workshop, but also one-on-one counseling. And so the study showed that while both groups benefited from the counseling in terms of their average credit scores, the control group showed a change of 8.5 points positive. The treatment group showed a 16.2 point positive difference. And while that may not sound that different, it was statistically significant. So I think it's also important to recognize not only is having some level of homeownership counseling really helpful for buyers, and first-time buyers especially, but having that one-on-one counseling piece can be incredibly beneficial. And as we talk about boomerang buyers, these returning buyers, while they have bought a home before, they're going to be more like first-time buyers. They may not have had much education on the front end the first time around, and that's why they got into trouble. Not for all of them, but for some. So housing counseling is going to be really important for a lot of these buyers, if not all of these buyers. And making sure that they're ready to return to homeownership is going to be really important. So with that, I'm going to segue to my second topic, which is general trends in the market. I just wanted to touch on 3 trends. There's lots of other things I'm sure we've all seen in the media about what's going on right now. But as it pertains to returning buyers, I wanted to point out three things. One is rental pressures. So we are seeing a growing affordability crisis in the rental market in almost all markets across the country. Media outlets like The Atlantic, the Houston Chronicle, they've all been reporting recently on this growing crisis. Harvard's Joint Center for Housing Studies just put out their 2015 State of the Nation's Housing Report, and they found half of renters in the U.S. are cost burdened. A quarter are paying 50% of their salaries for housing costs, and that there's a significant group of renters paying as much as 70% of their income on housing costs. Why does that matter for this discussion? Well, when you are facing a high cost burden as a renter, you're going to struggle to find that extra income to save up for that down payment so you could transition to homeownership. So while that's going to affect people who've never bought before, for returning buyers who may be facing other financial challenges, a tight rental market could make it more challenging for them to return. I briefly want to mention the strengthening job market. We've all seen the unemployment rate come down, which is great. What we haven't seen yet is the return of wages in terms of regular growing household income. But there's some movement, some positive trends happening, still really small growth. But if that were to kind of take off over the next year or two, that would be really beneficial for returning buyers. They would have more discretionary income, making it more likely they could return to the market. Where I want to spend a little bit of time is on this refinements to credit scoring models. And I know we have housing counselors on the line, and I'm sure they're very familiar with credit scores. But I do think it's worth spending a little time here because there's some potential that's worth highlighting. We have consumers that are considered unscorable because they have little or no credit information. So VantageScore and FICO have been looking at refining their models so they can score these thin-filed clients. VantageScore actually thinks its newest version, 3.0, can score 30 to 35 million consumers that are currently unscorable by Fannie Mae and Freddie Mac. They're using additional sources of data besides kind of your traditional data sources. So they're looking at rental payment history and utilities and that kind of thing. This new population of 30 to 35 million has about a third, 10 million or so, who would have credit scores under this refined model that are high enough to access mortgage credit. And further, a third of those are African American or Latino, about 2.7 million. And I'm sure you're thinking, as I was when I was looking at some of this data, we're talking about returning buyers who clearly had access to mortgage credit in the past. They did, but because the diversity of situations that many of those buyers faced in terms of how they left homeownership, foreclosure, short sale, deed in lieu, what have you, some of them may actually, over those, if it happened 7 years ago, 6 years ago, have fallen into this thin-filed kind of area if they have stopped using credit for various reasons. So they would benefit from lenders incorporating a VantageScore 3.0 model. A less significant change that's occurred under FICO 9, which came out last summer, is just reconsidering how medical debt is treated and weighing it less heavily and ignoring collections that have already been paid. So that's not changing really anything substantive with the model. It's just some refinements on the edges, but just those two changes could push up scores 25 points, which could put you into a new credit score bracket. So that could be beneficial to Boomerang buyers as well. Now, I will caveat all of this. To be effective, lenders and financial institutions have to use FICO 9 or VantageScore, which they are not currently. But Fannie Mae has stated that it's studying what it would cost to incorporate one of those models. So if that were to change, again, I think Boomerang buyers would benefit. So with that, I'm just going to go to my last slide in terms of scoping our discussion and why we're talking about Boomerang buyers. So we all know the foreclosure crisis was huge. So this population that could return to the market over the next several years is large, as much as 7 million, at least according to a recent TransUnion study. But as you can see, the number really vary by year, and it goes from now until 2022, at least what RealtyTrack estimates. So we're still not sure what that timing is going to look like, how many of them are going to be able to buy and when. And I think you're also going to see this really depend on the market, the local market. Where current home prices are affordable to median income earners, those places are going to be much more attractive to boomerang buyers. So they may also be places where they already live, if that market is affordable because it had a lot of foreclosures. So it'll be interesting to see where returning buyers come back into the market. And just one last point, not only do boomerang buyers face individual challenges, which I think Heather and Leah are going to touch on, there's also market challenges. It's a different lending landscape than it was in 2006. There's tighter underwriting, and bigger banks are doing actually less mortgage lending in general for some and less FHA lending for others, and FHA may be a good way in for boomerang buyers. So just slightly different landscape. So with that, I'm going to turn control over to Heather for her presentation, and just want to close out by saying that, again, I think housing counseling is going to be really important for this population of boomerang buyers and helping them transition back and be successful, especially now that we clearly know the empirical value, evidence-based research documenting the effectiveness of housing counseling. So with that, I'm going to turn it over to Heather. And we can see your slides, Heather.
Great. Thank you, Rebecca, for giving that foundation and lay of the current landscape and kind of talking also about the numbers of why housing counseling is so important. As Mindy said, my name is Heather Blankenship, Manager of Intake Services at Neighborhood Housing Services of Chicago. And NHS of Chicago is a certified housing counseling agency. Our mission is to create opportunities for people to live in affordable homes, improve their lives, and strengthen their neighborhoods. We do this by educating and preparing new homeowners for success, lending to help people buy, fix, and keep their homes, sustaining homeownership through foreclosure prevention services, preserving, rehabbing, and investing in housing, and building powerful and enduring community partnerships. And so that's a little bit about who NHS of Chicago is. And I'm going to talk here about how to find a housing counseling agency in your area that's reputable. You're going to want to look for a HUD-approved housing counseling agency. HUD sponsors housing counseling agencies throughout the country to provide free or low-cost service. The CFPB, Consumer Finance Protection Bureau, recently created an app that's available on a mobile phone or on the web to help you find a housing counselor in your local area. Also, something that's important is adopter of the national industry standards. And the national industry standards are a set of standards that has been created across the industry to basically give industry professionals a consistent and high quality service. And there's information at homeownershipstandards.com about what those industry standards are. It really lays a strong foundation for housing counseling agencies that they provide really strong services. And talking about those services, on preparing people for homeownership, those services include homebuyer education. This can be in person or online. And homebuyer education is that setting where in person it's a group of people coming together in a classroom setting to learn about homeownership, talking about mortgage readiness, talking about budget and credit, all those different credit scoring modules that are available, talking about financing for a home, shopping for a home maintenance, all these really important topics that home buyers need to know. And the idea of homebuyer education, whether in person or online, is to really give a strong foundation, building that vocabulary so those homebuyers can have an informed conversation with their realtors, with their lenders, know what questions to ask. One of the things that we always encourage people is to shop, compare, negotiate. So they need that vocabulary to have a really intelligent conversation with their home buying team. There's also pre-purchase counseling. This is where housing counselors work one-on-one with home buyers to evaluate their needs and help them meet their goals through budgeting, credit counseling, and walking through the purchase process. So this is where we meet one-on-one with an individual or a family. We talk to them about their specific situation. What kind of money are you making? Is it regular income that's coming in every week, or is it something that might be seasonal? And kind of give them an idea. Well, lenders look at these different types of income differently, and preparing them to have that conversation when they go to apply for a loan. If they're experiencing credit issues, we can talk to them about their credit score. Some counseling agencies, including NHS, are able to do a soft pull on the credit report, so we can have a conversation about, okay, this is where you are now, where do you want to be, and let's help you get there. And then walking through the purchase process. It can be really scary for first-time home buyers or for these boomerang buyers that we're looking at that had maybe an ungraceful exit from the homeownership, from their last homeownership experience. And getting back in that process is going to be real scary, so we can handhold them through that. One thing that we are seeing right now in the industry is a shift more toward financial coaching and financial capability. This is especially true with all the people that had experienced hardships through the financial crisis and may have lost their homes, may have lost their jobs. And so through financial coaching, it's meeting one-on-one to establish goals and provide advice on how to reach those goals. And that may include home ownership. And the importance of housing counseling and this financial coaching piece is that we're here for the long term. If you can reach your goals in 1 month, great. If it takes 2 to 3 years, we're going to be here and we're going to help you. So we're here to help build up, when working with lenders, realtors, other people in the housing market, we're here to help build that pipeline of preparedness for home ownership. Some of the challenges for boomerang buyers: knowing when to purchase. If people had a short sale versus a foreclosure, there's going to be different effects on their credit score, depending on, often with foreclosures, people may have stopped paying other bills. They may have fallen behind on their utility bills, they may have fallen behind on credit cards, along with that mortgage payment. So it's probably going to have a much larger impact on their credit score, and there's going to be a longer road to recovery for people that experience that foreclosure. On the short sale side, maybe they were able to continue paying some of those other bills, continue paying the credit cards or auto loan. So that short sale may have less of an impact on the credit score. And this is where that one-on-one consultation with a housing counselor can really come into play to help people know, okay, do I have 3 years before I can purchase again? Or is it going to be a year? Am I ready now? Where am I on that timeline toward being able to purchase again? Also, as I was talking before with the boomerang buyers, a lot of them, this is going to be a real emotional struggle for them. These are people who went through a tough economic hardship and have to overcome challenges. Talking about overcoming the issues with the credit score, overcoming, being able to save money for that down payment again. So these are going to be some emotional challenges, and this is where a housing counselor can help. We're here to provide support for people. And also, one of the real strong parts of housing counseling is being able to teach about sustainability. Housing counselors educate buyers on finding the right mortgage products for their situation. They also teach about home maintenance and budgeting for home ownership. And so these are things that really help people get into a home and be able to stay there long term. And with boomerang buyers, maybe they went through housing counseling before they bought the first time around, maybe not. And this is an opportunity, if they did not have that foundational knowledge, to really relearn about what it means to be a homeowner, to understand the whole that there are different mortgage products and that some products may not fit their situation and some may fit their situation better than others. And also teaching about the maintenance aspect, preparing for maintenance issues and having that budget and money set aside for home maintenance and preparing for hardship. Hardships happen. People lose their jobs. These things happen, and trying to prepare as much as possible for these contingencies to happen. And so I want to talk a little bit about how we can work together as different partners in the home buying. A strength of housing counseling agencies is they're going to know down payment assistance programs in their local area. Often down payment assistance programs have counseling and education requirements, and so by attending a homebuyer education, whether in person or online, that can meet those down payment assistance requirements. Also, counselors are going to know about the local programs, what there is out there that maybe you don't know. There are a lot of different programs that are popping up here and there, and they may be around for a short period of time. So it's important to have a local resource that can really identify what's available. Talking about referrals, I hear this sometimes from some of our partners that they're afraid they're going to lose their clients if they refer them to us. HUD regulations actually prevent us from steering clients as a housing counselor. So if you have clients that you want to send to us, keep following up with your client. We're just here to educate. And like I said, one of the big things that we do is you talk to our clients and tell them shop, compare, negotiate. If you have someone that you already know that you're working with and you like, keep doing that. We're here to provide education and a foundation of knowledge. Another opportunity where we could work together, sponsoring workshops and events. A good way to be connected with your local housing counseling agencies and their pipeline of clients is to sponsor their homebuyer education classes, be involved in their resource fairs. These are all really great places where we can work together. And another strength of homebuyer education and counseling and working with the housing counselors is you're keeping people engaged on the path to home ownership. And when we're talking about these boomerang buyers, that this could be a long path to home ownership again, we want to keep them engaged, whether it's through that financial coaching, whether it's through education and a series of classes, or if it's one-on-one consultations. We want to keep them engaged and on the right path. And some resources that I thought might be useful, and they're kind of new, is Freddie Mac recently released a new website with tools and resources for homeowners and home buyers called My Home. It's myhome.freddiemac.com. I highly recommend you take a look at it. It's a really great website for industry professionals and for home buyers. Great website. Lots of good information there. Also, the Consumer Financial Protection Bureau provides plenty of practical information for consumers. That's consumerfinance.gov. And it's a great place to look at information on lending documents, on scams, that type of information. And so that includes my part of the presentation. I believe next we will be handing off to Leah to talk a little bit more.
All right. Can everybody see my screen?
Yes.
You can see your screen.
All right. Thank you so much, Rebekah and Heather, for those two great presentations. My name is Leah Coldham. I'm the Director of Housing Counseling Programs, and I'm so happy to be here today to share some thoughts with you. So I'm going to build on the two presentations that just followed. I'm from the Housing Partnership Network, and I wanted to just start off by sharing a little bit about what we do for folks who may not be as familiar with our work. So the Housing Partnership Network is an award-winning business collaborative of leading affordable housing and community development nonprofit organizations across the country that are high capacity and high performing. Our members operate in all 50 states and Washington, D.C., and together we create, capitalize, and manage social enterprises. We're also a top-rated CDFI, and particularly relevant for this conversation, we're the first HUD housing counseling intermediary operating since 1995. And since that time, 750,000 consumers have received housing education and advising services through our members. NHS of Chicago, where Heather is from, is one of our members, so that's important to share with you all. So in terms of the two kind of areas of focus that I wanted to talk about today, is first that there is still a high demand for housing counseling services. Despite in the post-crisis era, there's still the aspiration for homeownership is still strong. I think what may have changed, though, is that consumers really are focused on speaking with impartial third parties and trusted advisors in a new way. And so the demand for counseling services and connecting with a counselor is strong. This can be particularly true for boomerang buyers and also for first-time home buyers, and those are two populations that I wanted to focus on today. The second piece, I wanted to kind of talk through new models for housing counseling. One of the areas that the folks at NHC had asked me to talk about is sort of where is the industry evolving, and what do today's consumers kind of look to from housing counseling agencies. So first, today's homebuyers really want ongoing and mobile connection to counseling agencies. They want to be treated like sophisticated consumers, meaning they're really interested in coaching to achieve their goals rather than sort of a focus on solving problems. And third, from the counseling agency's perspective, we're really focused on generating revenue to support our continued high-quality services, specifically as government funding recedes, as well as some philanthropic funding for operations. We're really focused on how do we maintain those high-quality services. So first, to kind of look into the boomerang buyer, who are boomerang buyers? As Rebekah had mentioned, the estimates are that there will be close to 550 to 700,000 boomerang buyers in the market in 2015. And these buyers are folks that may have lost a home to foreclosure, short sale, or another non-satisfactory closure, or were 60-plus days delinquent on a mortgage loan. They are concentrated in specific areas, and unsurprisingly, in hardest-hit areas of the country. These areas may also have higher affordability as well, so there is some matchup there, also unsurprisingly, right? So those areas are Arizona, some parts of California, Florida, Michigan, Illinois, Nevada, Georgia, Texas, to name some of those states. And in terms of what may have changed is that these borrowers may now be qualifying for a mortgage. This may be because waiting periods have passed, but also because products are becoming available with fewer restrictions for these borrowers. And just to give you sort of a standard kind of waiting periods for Fannie, Freddie, FHA, and VA loans, they do vary depending on the circumstances that led to the loss of the home, but typically range from about 1 to 7 years. So I wanted to share some resources for boomerang buyers with everyone, and particularly with a focus on programs that integrate counseling and homebuyer education, either into a mortgage product, down payment assistance, or closing cost assistance. I want to echo what Heather said, which is to really I encourage everyone to contact your local counselors for advice on state and local programs. There often are programs for first-time homebuyers, for boomerang buyers, and others. And your local counselor will be able to connect your clients with those programs. So definitely reach out to local partners. From a national perspective, there is the FHA Back to Work program. This is from the Federal Housing Administration. It was announced in 2013. It's a specific program that shortens waiting periods for borrowers to buy from 36 to 12 months after a foreclosure, short sale, or deed in lieu. But there is documentation that must be provided. So it has to be documented that the credit impairments that the borrower has are a result of a loss of employment or a significant loss of household income beyond the borrower's control. The borrower must demonstrate that they've fully recovered from the event. And the borrower also has to complete housing counseling. So again, if you have a client that you think may be a good fit for this product, certainly reach out to a local lender or counseling agency to see whether your client would fit with this program. A third program that I wanted to highlight is Fannie Mae's Home Path Ready Buyer program. It's for qualifying first-time home buyers, but I think it's important to note that first-time home buyer often means, and it depends on the program, but in this particular program means that this is a person who has not owned a property in the past 3 years. So that could be a boomerang buyer, as well as other types of first-time home buyers. So that's something to keep in mind. So for this particular program, qualifying first-time home buyers can receive up to 3% of the purchase price in closing cost assistance towards the purchase of a home path property upon completion of an online homebuyer education course. And that course is Framework, which I should mention is an online homebuyer education course that was created by the Housing Partnership Network and the Minnesota Homeownership Center. That online product powers the site in terms of the homebuyer education piece, and Fannie Mae will reimburse the $75 cost of the homebuyer education course at the time of closing. So that's another program that I think is important to know about when working with your clients who may be interested in that program. It's also important to mention that there are non-bank mortgage products available increasingly. These loans may be more relaxed in terms of credit requirements with shorter waiting periods, which can be attractive to boomerang buyers. What I would say is that there may be some fine print on that. So you certainly want your clients to consult with a housing counselor, look over those products, and see if they're appropriate for your client. They may not be appropriate for everyone. So certainly, again, counselors can help look through those products and see what might be a good fit. So building off of what Heather, Heather did a great job of kind of talking through how housing counselors can help clients sort of achieve their goal of homeownership. And I think that, and also to partner with folks in the industry as well. And I want to kind of build on that there as well. So I think, housing counselors can help in a variety of different ways, but they can really help in this new market to help build trust. So, there are wary home buyers out there in terms of boomerang buyers, but also in terms of first-time home buyers who may have, lived through the crisis and are thinking, oh my goodness, I need to pay attention here. And so these home buyers will really take note of folks who introduce them to impartial nonprofit housing counseling agencies. Education is a really great value-added service for folks and can really only strengthen client relationships and overall reputation. So if you're someone who's working with first-time home buyers and has thought about connecting with your local counseling agency or agencies, I would definitely encourage that. I think a second real benefit is that home buying is really confusing and difficult. But buying a home is easier when a client understands each step of the process. They're a better client, right? And so counselors really give home buyers the education they need to feel informed and confident, and they, as Heather mentioned, they can really navigate the process much more easily. And then finally, I think that counselors, where appropriate, can really turn fence sitters into buyers. So I think there is a lot of confusion out there right now, and there are a lot of buyers who may be discouraged, who may actually be able to own a home. And so counselors can really help consumers overcome the real challenge they have in terms of building their credit or building savings, but also perceived challenges that they may have and realizing that they can own a home. And so working with that buyer to achieve their goal and their dream of home ownership. Again, counselors can help first-time buyers qualify for special financing programs that make buying more doable. And they also have access to programs such as FICO's Open Access program, which gives nonprofit financial counseling agencies free access to consumer credit reports, including credit scores. So it can also really help the buyer orient where they are in terms of where their credit report and their credit scores. So those are just some pieces that I wanted to mention as well. And I think, one of the things that I wanted to focus on is sort of, okay, so this is where we are, but where are we going with the counseling industry? What's sort of the evolution of the industry? And I think it's, similar to the evolution of the housing market overall, right? We have a next generation of home buyers, of first-time home buyers. The millennial generation are coming of age and buying homes. And so I wanted to kind of talk a little bit about them. and sort of how they're informing the way the housing counseling industry is evolving as well. So, who is this first-time home buyer? Well, she's increasingly a single, so it's increasingly a single woman who's buying these homes. She grew up with the internet and uses it for everything, as we know. She's open to new modes of learning and living and embraces a do-it-yourself ethic. And also, importantly for us, values education and being informed. So what does that mean, for our industry? Well, from the perspective of the Housing Partnership Network, we really wanted to meet consumers online and be able to connect them to one-on-one services online as well. And so we created an online homebuyer education product called Framework. We created Framework with our partner, Minnesota Homeownership Center. It's based on their homestretch curriculum. And it's really one way to connect with this next generation of millennial homebuyers. It's a 9-module course that enables these prospective homebuyers to learn online at their own pace and with access to trained professionals, counseling professionals through the process. And looking at this particular population and also other folks who may benefit from having an online product, we wanted to make it as engaging and as intuitive as possible, and also make it mobile so that people can do it, on their own time, when they need to take it. So we focused on timely, effective online curriculum that improves the home purchase process, learning that really motivates and encourages and informs the home buyer's experience, the ability to apply concepts during the process. So that mobile piece is really important. They can take it on the go and use it, when they're talking to the other team members of the home buying, other folks in the home buying team. And also not just having it sort of a static learning experience. We wanted to make it highly interactive and really relevant to that home buyer's experience and focus on their needs, and also have it be focused on exploring, discovering, and choosing their own learning path through the curriculum. It's important to note that it's also available in English and Spanish, and that is our website if folks are interested. And so, for more information, we do have 95 partners that are approved Framework right now, and it exceeds HUD and national industry standards. So I think this is a really good example of sort of where we want to go in the housing counseling industry overall, looking at new business models and, rethinking our delivery system and marketing as well for these homeownership advising services. We really want to focus on the customer experience and connect with borrowers where they are, which often means online. For example, Framework being one of those ways to connect with borrowers online. And we're also focused on really looking at, branding ourselves in a new way. As social enterprises working alongside people to achieve their goals, again, rather than focusing on maybe solving problems. And part of that is, again, is that technology piece. It's being able to meet people where they are mobily, texting, making sure that consumer protections in terms of information security are in place, and that's something we're really focused on. It also means, I think, for the industry, stepping up our social media and digital marketing efforts and really connecting with consumers in that way as well. Another piece is keeping in touch and developing a long-term relationship with consumers. This really means sort of stewardship and post-purchase advising is huge. We want to prepare homeowners, but we also want to make sure that they succeed throughout the homeownership process. And we know that homeowners actually really want this support. Being a homeowner is different from being a renter, and there's different responsibilities attached. And so having that ongoing support from a homeownership advisor is really critical. What we know is that even though homeowners do want this, they're not particularly proactive about seeking the support. And so it's really up to our industry to innovate together in areas of partnerships and technology and marketing to ensure that we maintain that lasting connection with consumers. And then thirdly, there is this focus, which Heather mentioned as well, on helping consumers reach their goals through financial coaching. This is really using different techniques that focus on empowerment, that look at clients as adults, and it's really up to them to commit to and make the changes that they need to purchase or keep their home. With that said, the counselor is there to support them, to help build that plan and work with them throughout the process to achieve their goals. And finally, charging fees for counseling services is something that I think the industry is starting to move toward. And as Rebekah had mentioned, there is a high value of counseling. It's been well documented. And so those who benefit from the counseling, we would say should be paying for part of that counseling. And so that means consumers, it means partners as well, and thinking about how we can build sustainable business models to continue doing the important work that we do. So just final words, I would say counseling is the best kept secret in home buying, and we want to change that. We want people to know about us, and so you can help us do that. So for folks who aren't counselors on the line, please refer your customers to housing counseling agencies through the HUD and CFPB search tools that Heather mentioned, and through connections like online products such as Framework. I think the more we can connect our consumers to high quality education and really keep them connected through technology, the better we can serve the customer. So that's it for me, but I just wanted to say thank you to NHC and for everyone on the line, and I'm happy to take any questions by email. My email's up on the screen if folks want to connect with me in the future. So thanks so much.
Thanks so much, Leah. That was great. Both Heather and Leah, I really appreciate your presentation. So much good information there. We are going to open up for questions, and bear with me as I go back to my slides. A couple of points just to reiterate. We will email out the presentations and a link to the recording within a couple of days of today's webinar for folks interested in having those resources. And we've gotten a couple of questions from folks, just hoping Heather and Leah can recap a couple of their points for us. Heather, you mentioned an app for finding a housing counselor. Could you explain that again for folks?
Sure. The app is through the consumer.
Oh, did we lose you?
Sorry, I may have cut out there for a second.
Yes.
The Consumer Financial Protection Bureau did create an app to find a housing counselor, and it's based on HUD-approved housing counseling agencies.
Great. And then Leah, wondering if you could go over again the FICO program you mentioned that nonprofits can access for pulling credit scores.
Sure. It's called the FICO's Open Access Program. And what it does is it gives nonprofit financial counseling agencies access to consumer credit reports, free access to consumer credit reports and credit scores.
Great.
I don't have the information on the slide, otherwise I would go back to it.
No, I think that's why we had the question. So we've gotten a question about what social enterprise opportunities have the most promise, what could be replicated, and I think that's getting at, I'm guessing, kind of how we fund and support housing counseling maybe going forward. So, and I know you've mentioned that briefly, Leah, but maybe if you want to expand on that a little bit.
Sure. I mean, I think that's the $1 million or $10 million or $100 million question or whatever it is, for the counseling industry right now. And I think that folks are looking at it in different ways. And certainly, I think at a national level, there are conversations in place to try to figure out how we may create larger sort of fee-for-service models, specifically for the pre-purchase counseling. There are some fees for online products do provide some fee revenue, and there are individual sort of local programs that counseling agencies can connect to for fee-for-service opportunities, and Heather actually may be able to speak to that, I would imagine, better than I can. But I think that it's an ongoing sort of discussion in our industry, and folks are also approaching it, I think, at the local level too, in terms of thinking about how they can sort of bring on other aspects like realty programs or lending as well to sort of augment that. So I think partnerships are a big piece of that, but I think it's something that we're still working on, and we are continued and interested in having that conversation. So I don't know if Heather, if you want to add anything to that.
Um, some of the things that we've been working with are working with local banking partners and fee-for-service type programs where we're able to do the counseling and education that help people and help home buyers close on their mortgages. And so it's things like that that are able to help us have a sustainable program, and we hope that more of that will come online in the future.
Thanks. That's good, helpful information on kind of where folks are at and what they're thinking about in terms of housing counseling and how we're going to how we may fund it in the future. We've had a couple other questions come in, and I'm going to start with, and I think this could go to Heather, but Leah, feel free to weigh in. What do you do if you have clients ask for a realtor referral? How do you handle that situation as a counselor?
So as a counselor, we follow HUD's rule of 3. We give a minimum of 3 referrals for any type of service that people ask for. And we also encourage them to, if they have a friend or family member that has a realtor that they've liked, that they've used, that's a good resource, online websites, and helping them ask appropriate questions to screen realtors or lenders. And that's part of that shop, compare, and negotiate that we teach people about, is asking those informed questions to find the right person to help them in their home buying team.
Great. So moving on, I'm just curious if you have thoughts about this question. So we had a question about nonprofit housing developers. So they are working on a new home buyer project and so as a nonprofit they are looking to serve more low-income buyers. But it can be a struggle sometimes to create a pipeline for those units. So for these nonprofit developers, when should they engage with their local housing counselor to maybe see if the housing counseling agency has some clients who might be a good fit? What's kind of, when should they kind of reach out?
I can talk on this one a little bit. This is Heather. I would say sooner than later, and then often. We've had this experience before with developers, and it does take time to get a pipeline of buyers ready. So reaching out to a housing counseling agency as soon as possible is the best course of action there, because it is a pipeline, and pipelines take time to develop.
Yes, yeah, and I think that's why that's one of the reasons they were asking. It does take a while to build a pipeline, and also the development process sometimes can be shorter or longer depending on different factors. So having a good pipeline for when you're ready is very helpful. I think I will direct this at both Heather and Leah if you have some thoughts. Just a question about how do you become a housing counselor? What kind of education or experience is required, or do you kind of work on getting, if you know that's what you want to get into?
I can speak on this one a little bit. A lot of people that we hire in the housing counseling industry, they come from either the real estate or lending profession. They have some experience working for a bank or a mortgage company. We do a lot of on-the-job training. We utilize NeighborWorks America and their training programs to help get our counselors certified in the different areas with home buying and homeownership counseling, foreclosure intervention counseling, and then the group education, and providing group education. So I think a lot of counseling agencies do offer that on-the-job training, but also if you have any experience in the realty or lending professions, that is also very much a plus.
And I would just add, I think that's, that's all great information. The only thing I would add is that HUD is coming out with a certification for housing counselors soon, and they have posted quite a lot of training materials online for that certification. And so if folks are interested in sort of the topics that counselors need to know about and are potentially interested in becoming a counselor, the HUD website might be a great resource for you.
Great. I'm glad you mentioned that, Leah. Yes, that's an important point, the national certification that is coming, and it's good for folks to be aware of that. So I'm going to just take 2 more questions, and then we will close out the webinar. And one that I'm going to take, and it's a question about pipeline policies to create more affordability for both renters and homeowners. And that's a great question, and we could spend a lot of time on it. And I'm going to punt a little bit and just say NHC is going to be launching a website in September about inclusive communities, and that website is going to have a lot of great resources on how can we make housing more affordability, looking at things like how to use public land, inclusionary zoning, rental preservation. There's a number of strategies that can help improve affordability at the local level, kind of apart from HUD programming. So just be on the lookout for that September launch of the Inclusive Communities website. I think it's going to have a lot of great resources. And I will also suggest NHC has a number of publications on this point, and we have one coming out this week on more flexible ways to structure inclusionary zoning in urban environments, which might have some interesting thoughts. So again, we could spend a lot of time discussing that, and I wish we could, but I do appreciate the question, and maybe we'll have another webinar on that, just that topic later. And our last question that I want to get Heather and Leah's thoughts on is kind of what boomerang buyers face when they go in for a mortgage. So if they've gone through a default, a short sale, foreclosure, how does that affect their reentry? Are they going to have a harder time getting a loan? Hold on. I'm sorry, I misread that question. So it's the difference between a buyer who had a modified loan and defaulted versus one who didn't have a modification and also went through a short sale or a foreclosure. So is there a difference between this kind of specific group of boomerang buyers? So one didn't get a modification and foreclosed or went through a short sale. One got a loan modification and still was unable to keep their home. When they both come back in for a mortgage loan, what does that look like? Is there a difference?
And so the experience that I've had with this is that we're basically going back to that credit report and how if they were making on-time payments. That payment history is going to have the biggest influence on their ability to get a mortgage again. So looking at that payment history, and I don't know that the modification makes too much of a difference, were they making on-time payments? How long was it that they were not making on-time payments? That's going to have the biggest impact on the ability to get a new mortgage, is looking at how the credit report looks.
Perfect. That's really helpful. As we think about, there's going to be so many different iterations and variations among this population of returning buyers. It's helpful to think about what is going to be the most important to look at. So payment history. That makes sense, actually, when you think about it. So with that, I am going to close out the webinar. I did want to, I had 2 questions we didn't get to, and we will try and follow up offline as they were somewhat more specific. So I wanted to let Antoine and Carlos know I did see your questions, and we'll try to get with you after the webinar about those questions. With that, I think I'll close us out. Thanks so much to everyone for joining today. I hope it's been helpful. And again, we'll provide the resources and contact information for the speakers so you can follow up with questions, and including email addresses. Just wait a couple of days at the most, and we will send out those resources. So thanks again to Leah and Heather for your excellent presentations, and hope everyone has a lovely Tuesday afternoon.